All right, you're looking at a daily chart of the Nasdaq, and the bears are having a party. Talked last week about this head and shoulders pattern, and it's coming to fruition for the bears here. There's your left shoulder, and then here's your head, and then here's your right shoulder. Remember, the right shoulder was kind of high, saying it's been working out. It was kind of strong, but now we've got the Gumby shoulder, and it's making new lows here, and with the volume, the volume's really picking up. These are distribution days, like 3 or 4 of them here, right in a row. And so the thing about a correction is we never know how low it's going to go or how long it's going to last. So for me, I just let the dust settle. I still am holding a couple of stocks that are showing strength. But as far as you can't make any new buys, if you do, you can expect to be underwater fairly quickly with this kind of selling. This is very strong selling, heavy distribution in the indexes. And what we want is to see the institutional support. At some point, the selling will exhaust itself and then buyers will step in. At what point, I don't know where that is. It could be down at this 200 simple moving average. I don't know. I'm looking at prior end of bear markets and the beginning of new uptrends and how they performed. And this is pretty standard, actually. Obviously, the month of September has been an issue with the seasonality. The Nasdaq's down nearly 7%, but I'm not sure if just because we change the calendar, we're just going to start going higher. But we might, so we just take it one day at a time. There's still 3 more sessions left in this month, and then we'll just let the dust settle. I'm not shorting stocks. I mean, this thing is really oversold. A lot of the stocks are stretched. It's like buying a stock that's been up and up and up, for a long period of time. It's bound to pull back. Well, this has been down for a long time and it's bound to have a little bounce. So I don't really want to short here with it stretched to the downside. Anyway, I want to take a look at some stocks. With the Nasdaq making new lows, I got to point this out. Couple things. One is it's 5.4% below that 250 simple moving average, and it made a new low here, the 13,161. It undercut it on Monday at 132, but then rallied back. But today it undercut it and went lower, and the low was 1333, and it closed at 1363. So just 30 points above the low. So these and I had mentioned this before, the inverted hammer candles that we saw in the selling on the way down here in August before we had that pink rally day. Now we saw them again last week, these inverted hammer candles, which usually leads to lower prices, and we pretty much got one again today. So I wouldn't be, like I said, I wouldn't be stepping in front of this market. Don't be a hero, don't be a cowboy and try to fight the tape here. It's just working against us. And anyway, just keep in mind that as the Nasdaq is making lower short-term, I'm talking short-term lows here. We don't know how low it's going to go. I don't know how long it's going to last, but I want to take a look at some stocks, because as the Nasdaq made a short-term low, Apple did too, and it closed right at its old low there of 171.96. You can see that it just undercut it by a little bit today of 171.66, so 30 cents. But it is, it made a new lower low, a short-term low. That might just be a retest here, and it could bounce and find support, or it might really crack here and trade down to its 200 or maybe even lower. Who knows? Like I said, we just got to wait this thing out. There's some inflation data coming in on Friday, and there's supposed to be some fireworks on Friday, and Jay Powell is speaking again. Like we haven't heard enough from him. But the Magnificent Seven are all trading below their 50. They're all showing real weakness, and that's what's going to drive the index down. I'm going to get to some stocks showing strength in a minute. I just wanted to point this out. This is definitely going to drive your index down, and it's just it's a headwind to try to get in front of this. Google was the strongest of these Magnificent Seven. Today it cracked, and is now trading below its 50, and it closed today at the near the middle range of its daily range, but it's still 1.8% below the 50. And Amazon is another one that cracked. it was showing strength, looking good. But this is why, you kind of sell when they slice their 50, you sell, and this one's just going lower now. It's 6.7% below the 50. So save yourself some pain when you have rules like that. Tesla, that thing was making the right side of the base, right? And now it's cracked the 50 and actually holding up better than the other ones. It's still 3.7% below its 50. So, and Meta was tight roping that 50, just a tick below it, still holding up better than most. It's about the best thing you could say right now. It's trading tight and holding up better than most. And the one that I wanted to show was NVIDIA, because this is the the stock that the AI trend and the theme of the uptrend was based on, was NVIDIA and the artificial intelligence. And as the Nasdaq made a new low today, they couldn't push this thing down much at all. I was really surprised how it just wants to hang around that 420 area. And as the Nasdaq made a new low, this thing didn't come close to that 403 area. So yeah, I'm kind of liking the strength in NVIDIA right here. But maybe they'll crack it tomorrow or later in the week. But I just take it one day at a time. And for me, that thing made a low. It retested here, and now it's had a couple of days where it's kind of showing strength. Yeah, it was rejected at its 10 EMA today, but like I say, we just take them one day at a time, and that one held up like I say, better than most, which is not saying much. I don't want to get into all the negative stocks and all the stocks that are making new lows. That's too easy. I want to point out some stocks that are holding up. Novo Nordisk here is a drug stock that split 2 for 1 last week, and just not even close to making approaching these August lows of what, 75 and 77. So Novo Nordisk is holding up. Same with Eli Lilly, another stock that is nowhere near its summer lows. Once it gapped up, though, this is something that you got to point out. It gapped up here at 455. There it is. The high was 455. Then it gapped higher, and the low is 502. So it's got $95 to go back to this area, but just take it one day at a time. Like I say, now it traded down below its 21. It's trading tight now, so maybe it'll take a trip to the 50. Who knows? The volume is light, and it looks okay to me. VRTX is one that's holding up. This one marches to the beat of its own drum, and it's definitely just above its 50, so it's doing better than most. A couple of these biotech stocks I have to point out, because these are big stars today. This is a stock, SLNO Therapeutics, had positive news today on a drug. Normally trades 68,000 shares. Today it traded 41 million and was only up 500% with 60,000% above average daily volume. So that one is definitely one not to ignore, Dan. And anyway, ROIV was another one that was up in concert with IMVT with the phase 2 positive trial data. This one was up 21% with more than 400% above average daily volume. Definitely a move you do not want to ignore. And IMVT, I know they did announce a secondary after the bell today. It was up nearly 100% with nearly 3,000% above average daily volume. Definitely a move you do not want to ignore. Even with the announcement of the secondary, it's up 2% after hours, and that is a big breakout of a base. So I'm definitely intrigued with this type of a move. Anyway, I'm going to move on. Of course, what else is strong? The coal stocks are strong. This stock made a big move and just pulled back to the 10. This is what those bull wedges that I talk about. They work a lot better in an uptrending market, but this is a strong stock. So a bull wedge, a pullback on lighter volume. Now the last 2 days has blasted higher with increasing volume, and that's textbook stuff right there. That's kind of the only way you can get into these strong stocks is just on pullbacks. It's not going to set up in a base again. It already did that for a year. It set up in a base, and now it's running. So AMR is a super strong stock. A nice bull wedge pattern on that one. CEIX, same thing. So for this one, pull back to the 21. Very healthy action though. HCC is Warrior. Met coal, same thing here, pulled back 2 sessions to the 10, found support, and now trading higher there at $47. You can see this short-term little cup pattern, no handle needed, just the cup right here. 6 weeks. Yeah, that didn't take long. So anyway, the coal stocks are strong. I've got to talk about some of the oil stocks because they're doing well. This is IMO. This is one that I've never featured or talked about, but it made a new high today. And you can see the pullback into the this bull wedge pattern. This is what strong stocks do. They form these little bull wedges as they pull back to moving averages and find support and blast higher. So congrats to the longs there. That one looks pretty good. TDW is one of our leading stocks and just holding up well. I believe it bounced off its 21 today. Yeah, that one looks good. Weatherford, another one below its 21, but holding up better than most, well above the 50. Chevron is one that I have on our ready list. This thing is just trading tight. Had an inside day today, found support at the 21 here, moved up a little bit, pulled back to the 21, found support again, and now is above the 10. So CVX doing absolutely nothing wrong and just forming this little stage 1 base here. Just paid a nice dividend to INSW. I believe I had this one on our watch list last week or the week before I took it off because I'm just kind of reducing exposure here. But this one traded down to its 50 and 200, as you can see here. So the longer term moving average, which tells us it's been basing for a while here. And maybe now it wants to move out of its base here. Nice move from the 40 to 44. That's a nice 10% move here in a short period of time. And XPRO is another one that I do have on our ready list and just pulled back to the 50 last week, found support and bouncing higher. So those coal stocks, the drug stocks, some oil stocks are showing well. I'm just going to show a couple more here. CrowdStrike. I like this stock. It's holding up better than all of the cybersecurity stocks. I'm just trading right there around 161. I'm happy with that. Just stay there. It's fine. Stay above the 50. Trade sideways. I'm good with that. Yeah, showing real strength in a weak tape here. Anything that was up with the Nasdaq getting crushed today is showing strength. I shouldn't say it was crushed. It was down 1.57%. That's not getting crushed, but it's not a good day. Anyway, this is MNSO. This is or MNSO, not MNSO. It's MNSO, and it's a discount variety store based in China. You can see it pulled back to the 21, found support, and it's been up the last 3 sessions. So any stock showing a little bit of strength in a weak tape, just taking notice. I'm just observing. I'm just watching the fish tank and taking notes here. This is CASY. I talked about the bull wedge patterns with those oil stocks. This one's doing it as well. Pulled back, finally let the 10 EMA catch up to it. So keep your eye on that one for a little trade sideways, an inside day, or even a sharp bounce off that 10 EMA. So if I'm showing you that one, I got to show you Murphy. And this one is above its 10 EMA, so it's a little stronger than CASY. But I expect this one to pull back to its 10 EMA as well. Especially with the market being so weak. Abercrombie and Fitch, a retailer's been slammed lately. Abercrombie and Fitch holding up another one of these little wedge patterns back to the 21, finding support and increasing volume the last 3 days. And up, 2% in today's tape is pretty impressive, I might add. Arista Networks, I'm just showing you this one. It's below its 50, but as the Nasdaq is making lower lows, short-term lower lows, this one is not even close to that 149, its recent low that it made. So and Arista Networks holding up better than most. Williams Sonoma, the last one I'm going to show, had that big move yesterday, inside day today, and that's it for today, except for one more thing. I'm going to honor the great Steve Jobs. Some people were giving me a hard time about ELF because I didn't feature ELF yesterday. I normally talk about ELF, but this is a waterfall trade. I put it on our, that's a nice waterfall. Just seller, 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 and the sellers get exhausted, just like buyers get exhausted. And it had this hammer candle on Thursday, I believe, of last week. And I just pointed this out. This is what I'm looking for the indexes, where it makes a low and then closes at the high of the session. It made a low of 105 and then made a high of 106.38. and closed at 106.01, so 37 cents off the high there. So that's a nice hammer candle. On Friday, it pulled back a little bit, but not to worry. It's just giving you another chance here to buy. And I think the trade was from like 100 to 110. I don't think this is going to shoot right back up to new highs. I do believe it's going to make a base, but it did make a stand there at the 100 level. One thing that concerns me about ELF is this gap right here at 86.71, $86.71, and the low the following day was 94.53. So there's quite a gap there, and it could definitely trade down there as it forms a base here. It's been a long time since it's formed a base, so I did not forget about ELF, everyone. I'm still watching ELF, and it is showing strength. That is the trade though, from 100 to 110, a nice 10% move, definitely showing strength in this week tape, as I just think the buyers got a little exhausted, and the sellers got exhausted. And you wonder why a stock makes a base. If you held ELF for all this time and you're up a 2-bagger, 3-bagger, it's time to take some profits, right? It broke its upper channel line, which I talked about, on this day, when it went up to 137, then came down. It looked like it was going to make a base. Then they announced a purchase of a company, and it rallied back, but now it's come down. And really, this is from where, it's kind of basing from the 137. So there's reasons for bases. It hasn't based in a long time. We talked about it hasn't based since July, and if you've held all this time, well, maybe now is time to take some profit. So profit taking is a reason for a base. Sometimes people just don't want to hold this retail stock anymore. It's getting a little scary. The consumer slowing down, blah, blah, blah. And maybe they just don't want to hold it. Also, another reason a base is maybe people want to start selling this thing short. So you want to sell the stock short and buy it back later, that's fine. It's had a nice run. So there's 3 good reasons why this thing needs to form a base. There's nothing wrong with it. And if it keeps delivering these type of numbers, it's not going to be basing for long. Now, maybe it won't deliver these numbers and it'll crash and burn, but we're just going to have to take it one day at a time. I like companies that can deliver numbers like this, and they've certainly delivered the goods. The stock has been rewarded, but I'm going to continue to watch it, and if it forms a base, I'm definitely interested in this type of growth. As a growth stock trend trading investor and trader, this is the type of stock that I gravitate to. So I'm not going to forget it. But thank you for reminding me. Thank you for watching. And I know it's a tough time, a tough session today. It's been a tough month, but at MC Stock Charts, we never give up. So keep the faith, stay engaged. This too shall pass, and don't give up.